Hello. Good evening to all. It's Adil bringing you a review of the FTSE 100 from an intermarket analysis perspective. Okay, so it's been an interesting day. Ended up with 110 points for the day with subscribers and the live analysis service. So overall a good day, but obviously it wasn't as smooth as usual. It wasn't smooth sailing. Basically, I started the day off. Obviously, you've seen my weekend video. I expected AstraZeneca obviously to keep the FTSE afloat going into the week ahead, but given the Asian markets were down quite heavily overnight, China was obviously under pressure. Even though we had stronger data from China, we had the industrial profits rising higher than expected. Obviously, 10.1% was the actual number, but that still caused a risk-off scenario in the Asian markets. Obviously, given the fact that the US markets were sold off. So the bearish momentum continued, and given the fact that the Dow and the S&P and the Nasdaq were all under pressure earlier on, I expected the FTSE to sell off initially. Then obviously once it got into a sweet spot or a support zone, I then expected the thrust higher because the momentum will still continuing to be bearish from the Asian session. But obviously AstraZeneca had other ideas. Okay, so as you can see here, I mean Reuters. AstraZeneca share surged to boost Britain's top share index on Monday after US rival Pfizer said it wanted to buy the drug maker. Okay, that's something that obviously I didn't take into consideration given the fact that it jumped 14%. Now, the chart itself is right before you. And I actually, given the fact that the news came out last week and there was talk about a takeover bid, etc., and there's already a gap higher from the 3800s up to the 4100s and 42, 43. I expected that all to be factored in to a large extent. Obviously, the market has other ideas, and hence the reason why we got a gap higher. So I got stopped out my initial FTSE short from the 90 region at the 20 region, so around the 6690 was short. Stop loss 6720, got stopped out. 6720, believe it or not, was the high. So stopped out there. I stopped out my Aussie trade as well, even given the fact that you had lower inflation data from since last week, and it's broken out of its bullish channel on a daily chart. It has a H&S formation as well. I am swing short on the Aussie based on a swing trade. So this is the Aussie trade right before you chart of the Aussie. Let's see if we can bring up a daily chart. Come on. Should be able to bring up a daily chart here. Here we go. Okay, so daily chart, as you can see here, broken the bullish channel. Let's just have a look here. There we go. So we've broken the bullish channel. So basically, what we are on the verge of doing right now is potential H&S formation. Okay, so there's your left shoulder here. We're creating some form of right shoulder, and obviously down we go. Given the fact that we had a topping tail today, or alternatively, the H&S has already been triggered. There's your left shoulder head. And down we go. So basically, either way, we're going to break this. And that's why I'm swing short on the Aussie going into the next few days on the fundamental analysis service. That's free to all, that is, by the way. All you need to do is email me with your WhatsApp number, and I'll add you to the WhatsApp group. Okay, so you can get my email on my website. Obviously, you should be able to follow the links and on the YouTube channel, and you should be able to get my website. And let me know if you want to go on the fundamental analysis service. So basically, the situation here with regards to the Aussie, obviously given the fact that Aussie's bearish, and remember the FTSE and Aussie generally tend to move in tandem. So if the Aussie's under pressure, then obviously given the fact that Kiwi's under pressure, which it has been all day, and the Euro is under pressure given the lower inflation data that's come out, I did expect the Aussie to move lower. The reason why I was stopped out on the Aussie is because the Euro short squeezed higher, and that obviously caused the markets to eventually sell off regardless. So Interesting day. The morning was very confusing to read given the fact that you had AstraZeneca, and even though we had lower inflation out of Germany, that obviously triggered the talk and speculation of QE, etc., and that still didn't cause the Euro to fall. Euro actually appreciated and rallied higher. So what's interesting with regards to Euro is it has a gap level, and basically that's what it was gunning for. So if you look at your daily chart on the Euro, you can see there's a gap here around the 380 level, 1.3880, and obviously that's been filled. Okay, so we have a H&S formation which I expected to play out. Still it's below the 75%, so still a possibility, but certainly you don't want to see a right shoulder like that basically. If anything, given the fact that the inflation data has failed to propel the Euro lower, I honestly can't see what will eventually cause the Euro to go low. So again, something that we certainly have to look into. I need some more data here to really work out what's happening. But for now, just bear in mind, European markets and the euro have an inverse relationship. Whenever the euro goes higher, the European markets will come under pressure, and vice versa. What's interesting with regards to the euro is that the geopolitical situation, or the tension in Ukraine and Russia, has failed to cause the euro to sell off as well, which again, we'll see. Okay, we'll see. Obviously, we've got tapering FOMC this week as well, so that may well be the catalyst for the euro to eventually fall. But given the fact that even though policymakers have been trying to talk down the euro, it's still not going down until they see some concrete evidence or concrete actions for it to fall. So again, something else that's certainly debatable, and we'll have to take it day by day. I can't sit here and forecast because I don't know what the policymakers are going to do. I'm not in control of the policymakers' announcements or statements, and nor am I in control of what the Fed will do this week. And adding the fact that you got the BOJ as well, so it is going to be one hell of a volatile week, and certainly good for day trading. I mean, as like you see today in the morning, I started off with obviously minus 90 and eventually finished with 110 points a day. So that's almost a 200-point turnaround. So volatility is there, folks. Volatility is there. Okay, so let's go back to the FTSE now. Okay, let's have a look at our daily chart. So basically, what was the summary? Summary started off, AstraZeneca basically has led the FTSE to move higher. Given the fact that AstraZeneca now has a doji candle on a daily chart, what does that mean? Given the fact that this particular stock single-handedly caused the FTSE to rise in the face of a weak Asian session and weak US session Friday, and obviously we've had a weaker session, US session in the evening tonight with the Nasdaq falling as low as 3,500. So that's interesting. Okay, so we'll see exactly how that plays out going into tomorrow. And the Russian-Ukraine situation still remains in the background, so we shall see. We shall see. Okay, so basically you had lower inflation data, strong UK data, stronger retail sales from Japan, stronger US data, so housing data. We had obviously the Dallas Fed manufacturing activity as well. So overall good, and that's one of the reasons why I bought the Nasdaq at 3,500 and the Euro stocks at 31.46 and nailed 60 points in the evening. So that's basically the thesis with regards to that. So but again, Russia, Ukraine seems to be at the forefront, and that will dictate things overnight. Okay, so tomorrow will be interesting. Obviously, German consumer confidence data, you've got European data, retail sales, and also UK GDP. So again, interesting day tomorrow. We'll see exactly what happens. Given the fact that sterling certainly remains afloat and remains strong, that's obviously a negative factor for the FTSE itself. But tomorrow is a jam-packed day for the data, and expect another volatile day tomorrow. Okay, now let's go back to our TA now, given the fact that we've covered the fundamentals and we already know what's happening there. Okie dokie, right, let's have a look at the daily chart of the FTSE. The daily chart, basically what we have here, previous support equals resistance, and we have a few topping tails here, 1, 2, 3. Obviously bull flag seems to have failed for now, and could GDP cause this to propel the FTSE to go higher? Again, if that obviously causes sterling to go higher, then very much doubt the FTSE will go higher. So again, debatable. Okay, certainly debatable. But for now, all we need to know is that 6710 is solid resistance. If that obviously we do break above that, the next level is going to be around the 6770 level. So watch out for those two resistance zones. Okay, 6710, 6770, and then we'll just play it by the ear as we go along. Okay. Now the next one we have is the FTSE 250, what I generally check to confirm. This has remained weak. Okay, the only thing that I'm going to be wary of that is we could have a potential for an inverted head and shoulders pattern. So that's something that we're going to take into consideration. And if you do intermarket analysis, you know why that's an inverted head and shoulders. So I'm just going to keep a keen eye on that. Although having said that, the larger time frame, you do have a H&S formation. So again, there's a conundrum. Okay, hence the reason why it's going to be a hell of a volatile week. Okay. Now, given the fact that the Aussie is on the verge of breaking down its bullish channel, that obviously supports the thesis that the FTSE 250 will obviously break down and create a head and shoulders as well. Just bear that in mind. That's an interesting thought process there with regards to intermarket analysis. Now, FTSE 350, let's have a look with regards to FTSE 350. That's also at resistance. Okay, so horizontal resistance confirming there, topping tails. And again, just bear in mind, the Aussie is on the verge of breakdown. If Aussie is going to break down, then what do you think will happen to the FTSE? Yes, breakdown. So again, we'll have to see. I mean, could tapering be the catalyst that causes a sell-off? Could it be lack of QE from BOJ meeting? Could that be a sell-off? Could it be the European ECB just remaining talking down the euro and not actually doing anything, which eventually causes the euro to rally, and obviously that causes all the European markets to sell off, and then the FTSE sells off, okay, based on the fact that it all trades in tandem and it's one market. Again, that's something that's certainly worth discussing. But the only thing that I have to make you aware of is that the Nasdaq will remain strong. Why? Because of the Apple buyback, and that's one of the reasons why I bought the Nasdaq at around the 3,500 level today. So it's a hard one to sort of fathom. The only thing that we can do as traders is when we are in a conflicting situation, what we can do is observe the Dow Jones. Okay, so what do you see with regards to Dow Jones? Horizontal resistance inside day. What does inside day mean? It means that the bears are still remaining in control, and therefore the FTSE will go lower. So based on the Dow chart, Dow 30, we are going to go lower. The next chart we can look at is the the transportation index. Sorry, and let's have a look at the Dow transportation. Let's see what that's telling us. Dow transportation double top resistance. Obviously we've had a doji today. That's not a bullish looking chart, folks. Okay, so again, that's signifying and telling you that the FTSE is going to face some turbulence. But again, everything will be dictated by Yellen and her QE mantra. Okay, so this what we have here now is we have an expanding wedge formation at the top of a market. As we all know from TA, that's a bearish pattern. That's not a good looking pattern. Okay, so this is certainly signifying potential exhaustion and a move lower. So again, certainly take that into consideration. Now let's have a look at the smaller time frames, see if we can give you a better understanding with regards to smaller time frames. And bear in mind, AstraZeneca does have a doji on the daily chart, so given the fact that that's been the catalyst for the FTSE to propel higher, obviously the situation now changes. Okay, so given the fact that AstraZeneca is into resistance. Okay, so let's have a look what's happening here. So we had this HNS formation, okay, that obviously didn't play out, and I explained to you why, due to AstraZeneca, and obviously given the fact that the Nasdaq remained bullish. But I did expect some sort of wind down, and obviously then for the market to propel higher. But the most important thing right now is, given the fact that I've just explained to you that Dow has a double top, and given the fact that that remains weak, the FTSE obviously horizontal resistance as well. So basically, what do we conclude? We conclude from here that the resistance zone will remain at 6720 on the 60-minute chart. We have an unfilled gap, so this gap must be filled. Could that be tapering? Could that be the catalyst that causes a sell-off? Russia, Ukraine, could that be the catalyst that causes a sell-off? 60-minute chart now is showing you resistance. Okay, bullish momentum certainly isn't there at present. Okay, especially given regards to the Dow and the Dow transports. Given the fact that FTSE 250, FTSE 350 exhaustion, given the fact that the Aussie remains weak, given the lower CPI, and also given the fact that China remains weak overnight, this is not looking good for the FTSE. Now let's just have a quick look at the China chart. Let's just have a look at Shanghai, because that's the one that really dictates. And what does that tell you? We've got an inverted head and shoulders formation. We pushed higher, we failed to hit the target. Obviously the market reversed, the neckline has been breached, and what's been happening? The market's been selling off. Now we'll see whether or not the Shanghai can find support at this double bottom here. If this fails, given the fact that we've already hit this twice, third time obviously we break and we potentially move low. So this is not a nice looking chart, okay? And if this is not a good looking chart, what do you think will happen to the FTSE? That will turn into a bad looking chart as well, because everything moves in tandem based on intermarket analysis. Okay, so that's certainly something worth considering. So there's a number of catalysts for this to break down. Obviously one, lack of QE from Japan. And number two, tapering obviously continues in the US. Obviously that causes the dollar to spike. Risk on, everything. The cost of borrowing increases, emerging markets under pressure. We already have the MICEX under pressure today. So if I just quickly go to my Reuters platform, let's just have a look at the MICEX today. I'm not sure why that's open there. Why is BIST open? That's a Russian one. Just give me 1 second. I'll be able to bring that up. Basically, the Russian index was actually lower today. So again, that's another variable. Emerging markets under pressure. So this is certainly not looking good. And given the fact that you have a Shanghai chart looking that ugly, it's not a good sign for the FTSE. Okay, so bear in mind, unfilled gap below, and obviously we need to keep an eye out for that. On a 60-minute chart, unfilled gap is around the 6820 level, and we're certainly looking to move lower. Okay, on the 60-minute chart. Momentum certainly is shifting towards the buy side, so a downside. Okay, sorry. So you've got the unfilled gap below. Obviously, that gap was filled in intraday, so that was filled around 6690 level. Obviously, we propelled higher. So what's happening here? We've got horizontal resistance, and we'll see exactly what happens with regards to that. So horizontal resistance at 6720, support seen at the gap fill around the 6690 level, and we're just trading sideways. Okay, again, UK GDP tomorrow, we'll see exactly what the reaction there is with regard to sterling and the FTSE. That'll be interesting. Obviously German data as well tomorrow, so it's going to be one hell of a task tomorrow as well, trying to obviously decipher the noise and conclude which direction the market's going. But again, the biggest clue will be Asia. We'll see exactly how Asia reacts. Okay, we follow our yen pairs, we follow our risk FX, follow our commodities, and obviously applying to market analysis to read between the noise. Okay, so risk on, risk off, wax on, wax off. Goodbye now.